Is the UK heading for economic collapse? The United Kingdom was once the center of a global empire. London shaped world finance, British industry powered the Industrial Revolution, and the pound sterling was a symbol of economic strength. But today, many people, especially outside the UK, are asking a serious question. Is the UK heading toward economic collapse? This isn't a clickbait question. It's one that economists, investors, and ordinary British families are quietly asking themselves every day. Let's break this down calmly, clearly, and honestly. The warning signs are getting hard to ignore. Over the last few years, the UK economy has shown signs of deep stress. Inflation surged to levels not seen in decades. Energy prices exploded. Mortgage rates doubled in a short span of time, and wages failed to keep up with the rising cost of living. For American viewers, imagine this. Food prices rising like 2022 inflation, but staying high. Mortgage payments jumping hundreds of dollars overnight, and salaries barely moving. That's been the reality for millions of people in the UK. While the US economy had strong post-pandemic growth driven by consumer spending and tech investment, the UK struggled to regain momentum. Growth has been weak, productivity stagnant, and confidence low. This isn't a sudden crash, it's a slow grind. Brexit, the economic shock that never fully ended. You can't talk about the UK economy without addressing Brexit. When Britain voted to leave the European Union, supporters promised freedom, growth, and control. What followed instead was years of uncertainty. Trade with Europe became more complex and expensive. Businesses faced new paperwork, customs delays, and labor shortages. Foreign investors hesitated. Unlike the US, which trades globally without relying on one economic bloc, the UK had deep, integrated supply chains with Europe. When those were disrupted, the damage wasn't dramatic overnight, but it was persistent. Exports suffered, small businesses struggled, and many multinational companies quietly shifted parts of their operations elsewhere. Brexit didn't collapse the UK economy, but it weakened it at the worst possible time. A cost of living crisis that changed daily life. For the average British household, the biggest shock wasn't GDP numbers. It was daily survival. Energy bills doubled or tripled. Rent climbed sharply. Groceries became noticeably more expensive every month. Meanwhile, wages lagged behind inflation. In the US, rising wages softened inflation's impact for many workers. In the UK, wage growth remained weak, especially outside London. That meant real income dropped, sometimes sharply. Middle-class families started cutting back on basics. Young people gave up on home ownership entirely. Retirees struggled with heating costs. This wasn't theoretical economics, it was lived experience. Government instability made things worse. Another major issue, political chaos. In just a few years, the UK cycled through multiple prime ministers, each with different economic strategies. One short-lived government even triggered a market panic by proposing massive tax cuts without funding. The result? The pound crashed, borrowing costs spiked, global investors lost confidence. Compare that to the US, where even with political division, economic policy tends to remain predictable. Markets value stability. The UK didn't offer that. Confidence is a fragile thing. Once lost, it's hard to rebuild. The housing market, a pressure cooker. Housing has become one of the UK's biggest economic pressure points. For years, ultra-low interest rates pushed home prices to extreme levels. When inflation hit, the Bank of England raised rates aggressively. Suddenly, homeowners faced mortgage renewals at double or triple their old rates. This created a silent crisis. People didn't lose homes overnight, but disposable income collapsed. Money that once fueled spending now goes straight to banks. In the US, many homeowners locked in 30-year fixed mortgages. In the UK, shorter-term mortgages are common, making households far more vulnerable to rate hikes. That difference matters. Is this collapse or something slower? Here's the key question. Is the UK heading for a dramatic economic collapse like Argentina or Greece? Probably not. But is it facing long-term decline, shrinking influence, and lower living standards? That risk is real. The danger isn't a sudden crash. It's stagnation, a slow erosion of opportunity, a country working harder for less. And history shows that slow declines are harder to fix than fast crises because they don't force immediate action. Skyrocketing national debt. The UK government's debt is at levels not seen since World War II. To put it simply, the government owes more money than the country produces in a year. For American viewers, imagine the US debt growing so fast that every household had to shoulder tens of thousands in extra costs just to cover it. That's roughly the UK's situation. Debt itself isn't a problem if managed correctly, but it becomes dangerous when combined with slow growth, high inflation, and rising interest rates. The government has less flexibility to invest in infrastructure, healthcare, or education. Instead, a huge portion of tax revenue goes straight to paying interest on debt. And as global interest rates rise, borrowing becomes more expensive. Every time the UK needs to issue new debt, the cost increases. It's a cycle that can slowly choke economic growth. Productivity woes and shrinking influence. Economists often talk about productivity, the amount of output per worker, as the engine of economic growth. And here, the UK is struggling. Despite its global reputation, productivity in the UK has stagnated for over a decade. Innovation is concentrated in certain sectors, while manufacturing and services lag behind other advanced economies. Compare this to the US, where technology, energy, and finance continue to drive significant productivity gains. The UK's slower growth means fewer opportunities for higher wages, investment, or economic resilience. This isn't just about money, it's about influence. London may still be a global financial hub, but if productivity lags, its relative power on the world stage diminishes. International investors may look elsewhere, reducing capital inflow and slowing growth further. The risk of brain drain. Another worrying trend, talented young people leaving the UK. When opportunities are limited, wages stagnate, and living costs rise, skilled workers start seeking greener pastures. Many choose the US, Canada, or Australia, countries with stronger economies, higher wages, and clearer career prospects. This brain drain weakens the UK's long-term economic potential. Losing educated, innovative, and entrepreneurial talent makes it harder to compete globally. And for a country that once led the world in commerce and finance, that's a silent but significant blow. The energy crisis factor. Energy has become both a daily concern for households and a strategic threat for the UK economy. Dependence on imported gas and volatile markets has left the UK vulnerable. When prices spike, businesses face higher operational costs and consumers cut back on spending. The result? Slower economic growth. Manufacturing suffers, retail slows, even small changes ripple across the economy. Compare this to the US, which has greater domestic energy production and more insulation from global shocks. The UK's energy vulnerabilities are an additional pressure point, especially in winter months when heating costs soar. Could the UK recover? Despite these challenges, the UK isn't doomed. Countries have faced similar pressures and bounced back. But recovery isn't guaranteed. It requires strategic planning, political stability, and bold action. Potential solutions include investing in technology and productivity to generate higher-paying jobs, stabilizing the housing market to make homeownership achievable for younger generations, addressing energy security through domestic production and renewable alternatives, rebuilding global trade relationships beyond Europe. Even small wins in these areas could slow the decline and restore confidence among businesses, investors, and citizens. The human angle. Numbers and charts matter, but what really brings the issue home are the people. Families cutting back on basics, young professionals leaving because their dreams feel unattainable, retirees choosing between heating and food. These stories are the human cost of an economy under strain. For US viewers, think of a scenario where everyday life suddenly becomes a juggling act of bills, debt, and uncertainty. And imagine how that affects morale, ambition, and long-term growth. Collapse or slow decline. So is the UK heading for economic collapse. A sudden catastrophic collapse seems unlikely, but a slow, grinding decline is very real. If policymakers fail to act decisively, the country could face decades of stagnation, diminished global influence, and worsening living standards. For Americans watching from across the pond, the story of the UK is a cautionary tale. It shows how political instability, debt, and structural economic issues can quietly erode a nation's prosperity, even one with a storied history and immense potential. The next few years will be critical. Will the UK rise to meet these challenges, or will it continue its slow slide, leaving a generation struggling to maintain the standard of living their parents enjoyed? The signs are clear, the warnings are loud, and while collapse isn't guaranteed, caution and awareness shouldn't be ignored.